We'll be covering the outlook on the currency segment, and starting with the USD INR pair. This week we've seen some bit of appreciation coming in the rupee, but last week we had seen that the rupee hit the record low levels against the US dollar, and the primary factor was the strength in the dollar against its major crosses. So the dollar index has rallied to the 1-year high, and to be specific, it's a 13-month high that the dollar had hit. But yes, yesterday we had some comments that came in from the US president, wherein he had shown some bit of concerns over the Fed raising rates gradually, so which had led to some bit of weakness in the dollar, and that has been one of the supportive factors for the rupee in the last couple of sessions. We expect that for the dollar rupee pair, 69.50 69.20 zone will be very important on the downside, and on the higher side 69.80 and 70.05 70.20 zone will be important resistance. So overall the view for the dollar rupee is still on the higher side. Bias is still on the rupee weakness. On the domestic front, last week we had some important numbers that came in, specifically in the inflation number, which had shown that the price rise has been almost 4.17 in the month of July. So that was at a slow pace. It is around that RBI's comfort zone, so not much of an impact was seen. But yes, the major factor, the major driving factor has been the strength in the dollar index. Talking about the other major crosses, we have seen euro, pound both coming under pressure, and this week we've seen some bit of rebound coming in. We expect that this week some bit of positive momentum could be seen in the major crosses. So euro, pound and the Japanese yen could be trading with a slightly positive tone. So talking about the major crosses, euro, pound both have seen a rebound, and also the Japanese yen on back of the safe haven buying that we've seen in the last couple of sessions. The FOMC minutes was released yesterday, and the impact of the same was seen this morning. So in this week, the FOMC minutes and the ECB meeting minutes will be the major important trigger that will be driving the currencies market overall. But yes, specifically talking about this week, the bias for major crosses will be on the positive side, and Japanese yen could be slightly outperforming the other currencies because we've seen that the escalating trade war concerns is supporting the Japanese yen and is leading to safe haven buying in the currency. That's it for the weekly outlook on currencies from our end.